To understand the FTX collapse, you must understand the FTT token. FTT is a token created by FTX. It's what's known as a crypto exchange token. A crypto exchange token does not give you any rights on the business. It is not a stock, but it can serve utility. In FTX's case, holding the FTT token allowed you to get discounts on trading fees. As FTX grew in popularity, the FTT token price may also go up, so you can make money that way too. It was the use of the FTT tokens on both FTX, the crypto exchange, and Alameda Research, the investment and trading firm, that caused the collapse. What we've come to learn is that FTX was creating its FTT token and then giving it to Alameda Research to make their balance sheet look better than it actually was. They were doing this to cover up Alameda Research's losses. On November 2nd, 2022, CoinDesk published a piece that revealed that 40% of Alameda Research's $14.6 billion of assets on their balance sheet was held in FTT, a token that FTX made up out of nothing and assigned value to. We also came to learn that although FTX and Alameda Research were supposed to be two independent organizations, they were not. Exchange tokens are created by centralized exchanges, and centralization is the opposite of what crypto is trying to achieve, which is decentralization. The purpose of centralized exchanges creating exchange tokens is to incentivize people to stay on their platform and to use them to trade. Crypto exchange tokens are not anything special. Anyone can make them. FTT was an ERC-20 token created on the Ethereum blockchain. BNB, which is Binance's exchange token, is created on their BNB chain, the fork of the Ethereum blockchain. The reason US registered companies like Kraken and Coinbase do not have their own tokens is because they have access to standard equity markets and all the associated regulatory restraints. Binance was the first exchange to create an exchange token. It was so popular at raising equity, many other exchanges started following, and in the second half of 2019, FTX created their own FTT. But just because these crypto exchanges raise equity using their exchange tokens doesn't mean that you as a holder get equity in the business. The problem arose because FTT made up a big number of both FTX's and Alameda Research's balance sheets, and neither of them followed standard equity accounting practices. The company's equity isn't a part of its total value, it's only a reflection of its total value. Due to this basic accounting deception, it became a ticking time bomb. Because Sam Bankman-Fried started using the FTT token as collateral for loans between FTX and Alameda Research. Due to what's happened, a lot of other crypto companies have had to come out and speak about their own tokens. CZ, the CEO and founder of Binance, said on Twitter, 2 big lessons. 1, never use a token you create as collateral. 2, don't borrow if you run a crypto business. Don't use capital efficiently. Have a large reserve. Binance has never used BNB for collateral, and we have never taken on debt. This is why CoinDesk reporting about the flows of FTT was so explosive. It's not the sort of asset that should be used in the way that it was, and no truly independent entity would have accepted it as loan collateral or even considered it as an asset. This sort of bad accounting practice can only last as long as the token price stays the same or increases to go up. The problem is when it starts to go down, then suddenly you don't have the money that you say you're supposed to have. And what Alameda Research and FTX did is start using customer funds for their trades and to prop up their balance sheets, which is clearly illegal. CZ was one of the people who realized this, which is why he tweeted that he was going to start selling their share of FTT tokens. Once CZ tweeted this, a bank run started, in which everyone started selling their FTT tokens and withdrawing all the liquidity from FTX at the same time. This all happened very suddenly, and at the beginning of the week, Sam Bankman-Fried was a multi-billionaire, and by the end of the week, he had nothing and his company was bankrupt. Not only that, everyone who had money on FTX exchange, both institutional and retail investors lost everything. Now, everyone from Sam Bankman-Fried to Tom Brady, Larry David, and even finance YouTubers are under attack for recommending FTX. To stay up to date with crypto news, check out this video next, which I think you'll also like. I'll see you there.